Hey everybody, welcome to Watches with Dennis, and it's another live stream on Saturday. And rather than covering new watch releases, I have a selection of discussion points to bring up regarding some recent profit information that came out of Swatch Group. We've seen, you've probably seen some articles about it because a lot of the mainstream news media has been covering a lot of this. By that, I mean, not just watch media, though, to be fair, coming from pinball, I'm always surprised to see how all these major news outlets cover watches, but they are much bigger than pinball is. So I really shouldn't be shocked anymore that Forbes is always writing about them. But anyway, we've got a little bit to go through there, especially regarding what Swatch cites as the reason for their economic decline in terms of profitability. And so we're going to go a lot into China because that's really what they're talking about. And hopefully I've got it in a way that'll be interesting and not too in the weeds about China and economic policy and kind of the history regarding what's been going on with it. But I think it's a really interesting topic. So, but it might not work as well as I'm thinking it will. But I, of course, will find out from you all as we go along. So, in terms of housekeeping items, I did finally my time really late Thursday night. After having spent a week with the Breguet 5177, I did get a review video up on that. So that video is out there for anyone who wants to go. I don't always do a great job on macro photography. I don't have really fancy equipment. But I did try and get some nice close-ups of the dial. I think it turned out pretty well. So if you're curious about some of that and the guilloche work that Breguet does on those style of watches, I do have some pretty good close-ups of it. So anyway, that was been the only video since the last live stream, and probably won't be a pre-recorded video till the next live stream, which should be on schedule. However, I am traveling for work, so I really won't have time to do recorded videos this next week anyway. So all of that, and I think that's really all the main things to touch on, other than I had an interesting email that came in from Christopher Ward. So I know we've joked a few times about Christopher Ward, and it's not a company that has watches that have really appealed to me personally to want to go ahead and get. But I did a couple of days ago, kind of out of the blue, had an email from one of their communications people, which indicated, and I'm going to assume maybe they did some internet searches, but maybe one of you told someone about what I have been saying. I don't know. Very polite email, noting that I had been using a lot of like watch blogs to talk about the Christopher Ward watches, and that they noted I wasn't on their media list, and if I wanted to be on their media list, which I'm on the media list of a few companies, so that I get the links and the high res photos and stuff emailed directly to me, which is I generally say yes to those, and I said yes in this case because it makes my abilities, or I should say my job, easier, because I don't have to go through and wait for someone else to write something up. I can just, because normally I just want the photos and the specs, and I can usually get those from the website. But sometimes it's a little weird depending on the brand. Sometimes the website doesn't have very good, like the photos might be okay, but they might be low res JPEGs. It's almost shocking, really. Some of them have press kits online, and you can download the press kit photos, which of course is usually the I don't like using the photos of, and I've done it before and cited it, but I try not to use other people's images. You have fair use issues that come into play. But when you're using the stuff off of their websites, they're trying to sell watches, you're commentating on watches, the fair use argument from US law perspective. Long story, I know. It's very clear though, like there's a really clear fair use demarcation. So anyway, of course, on these streams, you see the link in the URL when I do a screen share. So I don't worry on those sort of things, because you actually are citing, not just citing, but the whole reference is there on the screen. Anyway, long story short, they're like, yay, you can go ahead and have that. And I said, fine. And then they asked if I wanted a sample watch, which I said, no. I wasn't sure initially when they suggested it, if they meant a sample to keep or not. And I don't accept watches that I get to keep as a rule, because I understand other people that do that, and that's how they monetize their channel. The ad revenue is not great. So they sell the watches after they do their evaluations and discussion and whatnot. And I don't need that, because this is not my career. So I always have concerns about the ability to trust people that do that, because it's an inevitable conflict of interest to be a reviewer and to also receive free product. So said no. I do think on their follow-up email, they were suggesting that it would actually be an item that I could then return, which doesn't, I don't think that falls into the promotional realm as long as your materials aren't being screened. So that would conceptually be okay, but it's a lot of work. I have concerns about whether the watch is stolen while I have it and insurance and all that. So long story short, very nice of them, but I did decline. But I said, go ahead and add me to your media list so that I can have your pretty photos. So anyway, so that has been a recent thing. But of course, of all brands, right, Christopher Ward, the one that I've probably been most critical of the bigger brands in terms of their design language. But it is what it is, I suppose. So anyway, I'll get caught up here with the chat real quick. On the wrist today is not the Breguet. I'm wearing the Moser Pioneer Center Seconds funky blue dial version, because after a week with the Breguet, I needed to wear something else, or wanted to wear something else. But let me go ahead and see what you all are saying, and then we will get into our swatch topic, which I hope will be a lot of fun for folks. Good morning, Kevin. Welcome to the live stream. Glad you could make it. And same to you as well, Tuna. And thank you also for being a 99 Cent Club member. You see, I don't need sample watches. I got 99 Cent Club. That's what butters the bread for me, or maybe buys the little packs of butter that I could put on the bread, because those are pretty affordable. Skate Reel, welcome to live stream. Skate Reel, that dial in the sunlight. OMG. And he's referring to the Breguet. Yes, the basket weave guilloche. All the guilloches I think look really, really good. I do like the basket weave a lot, and it's interesting because the pattern actually alternates when you look really close. I can't notice that from the wrist distance. It was only zoomed in. I was like, oh, that's how they get it to play in that light. And one of the other things I would know, I noted this, I think, in a comment to someone, but like I went to Audemars Piguet's boutique in Dallas a few months ago, and I had them get out a code 1159 for me, and it had a guilloche dial. Well done guilloche, of course, but like it was an attractive pattern. But in the light, I couldn't read the watch. It reflected so much light because it was almost like a sunburst, like a radial brushing had been applied on top of the guilloche. So in bright light, and it was the bright lights of the jeweler, I couldn't easily tell the time because it was reflecting so much light. The whole point, as it turns out, I just thought it was decorative, but the whole point of guilloche was to make the watch more legible. And that's one of the things that you can notice. And in that review footage, I shot some of the watch on my wrist in the sunlight, actually in really bright sunlight. It was a very sunny day. And you can see how easy it still is to tell the time, because it's not, I love sunburst, as many of you who have watched my channel know, but sunburst on top of guilloche kind of counteracts the whole point to the guilloche. The guilloche makes it so those Breguets, you can tell the time very quickly, because the fire blued hands stand out against those white dials, and the guilloche cuts down on the reflection and refraction of light significantly. And that's the value of it. Of course, the value from a collector perspective is hand-done guilloche is not common from a lot of brands. If you want a brand that, I was trying to think, is there a brand more affordable that does rose engines turning guilloche? I think Chrono Swiss might, and they would be cheaper. But their movements, I think, tend to be more Ebosh, so which would be an explanation why the pricing is better. So that would be another option for those of you that like guilloche. Take a look at Chrono Swiss if the Breguets even used are higher than you want to be. But that being said, especially if you're willing to look at some of the smaller Breguets, you can find them at very significant price cuts. So I mean, mine that I got was over half off of what the Breguet lists it for on their website. But if you go with like the 35 millimeter models, like mini watches, the price, if you're under 36 millimeters, they fall through the floor, and Breguet loves to do 35.5, and they have long lugs. So I would say, I haven't been able to try one on, so I can't promise, but I would say their 35 and a halfs probably wear more like a 37, 38 would be my guess. But I wasn't willing to take the chance without being able to try one on. And this is not a Breguet dealer in the area. Whereas the Breguet I got is 30 on paper, a 38. It measured nearer 38 and a half when I got my calipers out. But I know 38s are fine for me. Like no matter what, you'd have to have like the super lugs to make a 38 not work for me. And the lug to lug on those is well under 50 millimeters. So it's no big deal. Okay, continuing with the with the catch up on the people talking. So Tuna says, Dennis, the face of Christopher Ward. Yeah, don't think that you see the email. It didn't offer to let me have the branded Bel Canto watch. We could have done a gray dial, guys. It would have been, imagine it, a gray sunburst Bel Canto. And then I've been like morally obligated to have to buy it because they contacted me. That's how they get pinball people. They get you like they'll bring in people to do the voice work or be in the art or something. And those people feel compelled to buy the game because they contributed to it. And so watches, you could do it one YouTube channel at a time. You get your sales, and based off of what's happened with Swatch, maybe that's something that needs to come up. Sir Dennis, no, I as an American, no royal titles allowed. Paul S, welcome to live stream, says, managed to log on though I'm at work. Christopher Ward, that's hilarious. It was funny. It was amusing, but very nice of them. Some groups don't even ask. I do have my email in my about section on YouTube. Some would just add me to their media contact list, and I just get their stuff. So it was nice of them to ask if I wanted the spam. Scotty Pinball, welcome to live stream, said, I respect your decision, but I would take a smoking good deal on the Bel Canto if you reconsider. Okay, well, I did get a follow-up email where they made clear like there would be a box to send it back. So they were proposing a true sample where I would get a sample to evaluate and then return, which to me is a much better system for like how I don't have a moral objection to that. I'd have to review exactly all the procedures and policies and such. And they addressed my insurance concern regarding shipping. What I didn't clarify was what happens like if the watch is damaged in my possession. I get that they would cover the insurance for shipping to me and back, but stuff can happen while you wear the watch. I've dropped watches before. So it's, that sort of thing where it's like, if you don't have the arrangement all set up, I would be very concerned about all of a sudden having to buy a $4,000 watch that I didn't want to own, that I only had in for content purposes. So anyway, just those little things. Joe Bolt, good morning. Welcome to the live stream. Joe, I got a fee. Oh, you were the referral. Okay. Well, I'm glad you got paid, Joe. At least somebody did. Skate Reel says Glashütte. So is it Glashütte Original? Or are you thinking does Guilloche? I haven't looked enough. I guess they would. I mean, they do all sorts of stuff. I hadn't really thought about them. But I only ever owned one Geo watch, and it wasn't a Guilloche one, so it's just not something I really thought about. And Joe says, congrats on the new watch. It looks amazing in the photos. I like the hands gassing that dial. I'm not sure if that was the phrase you meant, but if it is, I don't know what gassing means in that context. And Joe, contrast. I like the contrast of the hands. Okay, there's the new comment. Okay, that makes more sense to me. Yes, very, very legible. And Skate Reel says, yeah, I think they do some affordable ones. Yeah, Geo is one of the best hand-finished deals there is in the luxury watch industry. It's been a couple of years since I saw a report of analysis. Like it took the average price of a watch from each major manufacturer and also figured out the number of hours, man hours, person hours invested into the watchmaking side. And like the biggest bang for buck was Geo, or Geo was right up there. I think it was Geo at number one. And when you look at some of the things like the Pano line and you get hand engraved balance cocks and the finishing that's done to the movements and all that, retail, their pricing to get into that stuff is a lot lower than all these other manufacturers. And they're a Swatch Group brand as well. So very, very interesting. So I said we were going to talk about Swatch, and we are. And the first thing I want to do is, this is a part that you probably are all already familiar with, but it's the issue about their profits. So the nutshell summary is Swatch, because they're publicly traded, had their earnings call, and they indicated that so far for the first half of 2024, that their profits are down 70%. So a significant profit decline for them. This is showed up in a variety of indicators, but the nutshell explanation from Swatch, which I do believe is accurate, and we're going to spend a lot of time going into that, is because of what's going on in terms of demand for luxury watches in China. In fact, it's demand for luxury in China in general. China has for a long time been a very large source of sales for many, many watch manufacturers and other luxury watch goods makers. But basically, in terms of the summary. And again, I have links to these articles in the show notes. I don't know if the 70% figure is stated in this Reuters article. However, that is one that headline that has been used in some other places. But I think just in terms of the profit change, it's interesting to go ahead and say, hence why I have gone ahead and said it. But in this one, you can go through and read, but you can see things as they go along. But the net sales dropped 14.3% for the January to June period. The company's stock after this announcement came out dropped almost 12%. Operating profits are down by over 200 million francs. It's been a contract. Their operating margin was 17%. It's now under 6%. And yeah, that 70% decline in profit was about 147 million francs in terms of a decrease. So if you wanted to know the raw numbers. So I love this quote from a Vontobel analyst who said, "An ugly half year for Swatch Group in all respects." I think other than, they tried to find some bright spots pointing to some of the Swatch brand, the plastic watches, like they saw some good sales in some areas regarding that. They've talked about good opportunities. Swatch is speculating, and that's what I want to lean into, that in 2025, they expect to see a recovery start to happen in terms of the sales demand in China. They're projecting that the rest of this year, they're not saying good things about China. They do think that Japan will be good for them. They think the United States will be good for them. They think EU might be good for them. So they expect things to be better the second half of the year than the first half of the year. But the biggest issue regarding the change is down to what's been going on with China. And that's why we're going to spend a lot of time going over what's been happening with China. And hopefully I don't lose you all into a sea of geopolitical discussion, but I think it's interesting and it's definitely very, very relevant to what's happening according to Swatch. And I think broadly, this is accepted. Like Burberry and other luxury brands have run into the same thing, the wood chipper that is Chinese demand, something that many of these, we often, when we talk about watches and we have our focuses, like let's take Omega, for example, around here. And by here, I don't just mean the US, I mean Europe as well, which is where most of you are either in Europe, England, or the United States who are watching this. And we often will talk Speedmasters and Seamasters, right? But the DeVille sells really well because of Asian demand, Chinese demand in particular. And this is true for so many other brands where I will look and I'll go, who's going around buying all of these Rados that aren't Captain Cook's? And it's like, well, other parts of the world have various demands, and China has its particular fondnesses. Some of them are for the same things we like, and some of them are just for a little bit different things that just do well in those economies. But China watches have been a very aspirational product that have been used to flex or to show success. Kind of like when we talk about professionals who want to get their first Rolex, that sort of attitude exists in China as well and was big business. In fact, there was a time where essentially, I'm going to describe it as legal bribery was allowed, and watches were a common thing where you could acquire watches to give to government officials. Now that changed years ago in China, legally changed years ago, but it's still been a very important thing to show success in the Chinese market, to get things like watches. That's a very, very public display of success, and watches are a key component of that. So looking at the chat, I think the only thing I see so far is Tuna knowing the 70% being a wow moment. Yes, it is a significant profit decline. I believe part of this may be because Swatch has not been, they've been trying to avoid terminations. They've been trying to avoid layoffs and just to weather it. And a lot of that, I believe, for obvious reasons, is going to come down to how the economy goes in China. So we are going to talk a little bit about that. And here's the part where everyone's going to turn this off, but it's my old poli-sci nature coming through. So we're going to talk about China's economy and the third plenum, or plenum, I believe it's Roman, if I remember, from the old Roman Emperor, the plenums. So it's a weird expression, but we're going to talk a little bit about it. So what is it's always called the third plenum. It's not like they've had the third one just now. This concluded around Thursday or so, U.S. time, I believe. But the Third Plenum happens every 5 years. It's an economic focused big Chinese Communist Party event. It's more propaganda than it is actual serious policy making, but some major announcements regarding the direction of the country happens at the Third Plenum. And so people like to pay a lot of attention to it. I have several articles for you that are linked. We're not going to go through all of them, but it'll just give you some background. So I've got something from Foreign Policy that will explain to you how the Third Plenum works as a thing. I've also got an article here from First Post that is in the link, which this was before the Third Plenum happened, but talks a lot about Xi Jinping and what's been going on and what's expected based off of what he's already been saying prior to the Third Plenum happening. And I just added this morning a link from Asia Times if you want to know about what actually was announced at the Third Plenum, because that information is now available. So, long story short, we're not going to read those. It's not like a watch blog article thing where we have lots of pretty pictures. China's economy has been in trouble as a strong, perhaps too strong, but I'm going to use that phrase. It's been in trouble for a while. For those of you that don't recall, during the COVID-19 pandemic, China had very aggressive lockdown measures. And so some things had been exacerbated because of that. So if a case of coronavirus showed up, they would lock down entire cities. And not like American lockdowns or European lockdowns, which were the term lockdown was a bit extreme. There was very, at least here in the US, it was very porous. There were lots of exceptions, lots of essential workers of things that were in no way essential to survival and all the rest of it. And there was a lot of concern about the impact to the economy. And so that drove a lot of those decision making. Also in the United States, states have control over public health, not the federal government. And so because of that, different states have their own rules. So since everyone wasn't on the same page, we didn't have the same ability to control disease outbreaks. China wasn't able to successfully truly control the disease outbreaks, in part because it's an international economy and people would be flying in, and then all of a sudden a new lockdown would happen and all the rest of it. Their economy had already been slowing quite a bit. And so this is where I want to get into the history a little bit about what's happened with China. So I'm going to try and condense it really, really quickly. I'm not a Chinese policy expert, but after Mao Zedong, we're going way back. After Mao Zedong died, China started to open up its economy a lot more. This was under someone, his name was Deng Xiaoping, and Deng Xiaoping went through and did a ton of economic reforms to China, and he is widely credited in China for moving them into being the second largest economy in the world. Now, there are a lot of things that work to his advantage, in addition to being able to loosen the very strict non-economic based controls that Mao had put into place. There were other things that happened, like China getting back Hong Kong from the lease to Britain, and then basically kind of taking a hands-off approach where they got to run their economy different than the rest of China. And so they got a new economic engine under them that had been developed under the British, and a variety of other things. But so Deng dies, leadership changes happen, and now China for quite a while now has been under the control of Xi Jinping. Now, Xi Jinping is a little bit like Mao in that he has been building a cult of personality around himself. He's consolidated power a great deal under him. And so basically, when decisions happen in China now, it's seen as these are Xi's decisions in China. Deng Xiaoping was not like that. Deng Xiaoping did not have the same level of power. He didn't have he wasn't at the highest. I can't even remember if he was ever truly like president of China. I don't think he was, but he was seen as the reformer. So Xi Jinping is trying to brand himself as a reformer, but he has been widely blamed by the Chinese people for what's been going on with their economy. Now, some of this was inevitable. When Deng was able to build up China's economy, the cost of labor was exceedingly cheap. And that is why China has become and remains a major manufacturing hub for all sorts of businesses, domestic and foreign. However, because their standard of living has increased with all of this economic infusion, which is a good thing for the country, Labor is not as cheap as it used to be. China is not the cheapest place for everything anymore. So getting back to all of this stuff about the Third Plenum, one of the concerns that's come out of it with that those standards, the manufacturing edge that they had not being the same as before, with the desire, the conflict of other countries to see China be more consumer focused and start buying more stuff, importing more foreign goods like we all do in our countries. Xi is not doing this angle. He is doubling down on manufacturing. So what came out of all of this, which is covered in the Asia Times article, is a continued focus on manufacturing. They say they're going to loosen regulation on businesses, but they want to have a continued state focused on technology manufacturing. So advancements in technological manufacturing. So think like circuit boards and those sort of things. So they like to lean into high tech, but they want to be building things. This means that we're going to still have a conflict between Western powers and China over China's economy. And you see things like the United States putting in new tariffs on EV vehicles because China uses government money and subsidizes tech stuff like that to undercut our own domestic production. And then they want to sell them for cheaper because it was heavily subsidized by Chinese taxpayers. And a lot of countries are getting sick of that and saying, you're not trading fair. You subsidize and you do all of this stuff. And the methods aren't working anymore for China. And Xi's getting blamed for it. So coming out of this very political Third Plenum is trying to rally around him. They had like a documentary come out branding him as a reformer, but not very much is changing. And he's still saying it's all about manufacturing. And it's unclear if that's actually going to work or not. So that is my groundwork. I hope I didn't make it too boring, but that is the groundwork for this. Is going to get back to watches, but just so you understand what's going on, because Xi Jinping, first and foremost goal, in my opinion, is to preserve his own power. He's eliminated a lot of his rivals and forced them out of the government and consolidated in a very Maoist style way. Unlike Mao, he does understand economics and is very cognizant that it has to be a balance between state-owned enterprises. They've had a growth of private-owned enterprises. They need to attract foreign investors in order for them to have the growth that they used to have. But their housing market has stalled out, and their businesses are not meeting. China's economy is still growing. It's not growing at projected rates, though. So it's not even meeting its targets. Targets that were already thought to have been lowered to be realistic. So that's the groundwork of the scenario that we see coming out of this. So catch up with the chat. Tuna says, true, I've never seen a Captain Cook in the flesh. Back to our prior discussion about another Swatch brand. And Skate Reel says, weather it, stock market is at an all-time highs and watch market has continued to go down. Let's be honest, 2020, 2022 market is nowhere near to come back. Yes. I'm hoping their weather it is more in terms of, we have to remember, like a group like Swatch Group is a manufacturing entity first and foremost. They're not artists. They may employ artists who design their watches and such. They're not like stock traders in and of themselves. First and foremost, to these brands on the watchmaking side of them, they are manufacturers. And this gets back to my old pinball experience. What do they want to do? You keep the line moving. You want to keep building. They could throttle supply. They could lower prices and still turn out the same number of watches. Those sort of strategies, I think, are more likely in terms of the weather versus, let's think about Rolex, and we're going to jump into that, in fact. So I'm going to go ahead and change my little ticker here so we get to that part, the exciting part. Because this is going to be true for all of them, Rolex and the rest of these brands. And by the brands, I think the big ones, LVMH and Richemont, right? Swatch, Richemont, LVMH, Rolex. They're the big players in the Swiss side, where there's a lot of Chinese demand for all of their watch products. They're all in the same boat. Rolex was gearing up, right? They're building a new big factory. They've been using temporary facilities. They have that free training program in Texas to train watchmakers just to staff their service centers. This is going to apply to all of them because China was a big source for all of them to sell watches to. And as Skate Reel has noted, like, we are not in the same economic boat, we being Europe, America, as China. Like, China's economy has been stumbling. They have massive swaths of land where houses are partially built, and these home builders went out of business. They ran out of money. In the United States, it's not like that at all. There's this general malaise. There's this feeling because of high inflation that the economy is bad, but none of the other numbers. My stocks have never done better. My stocks have done great. I had some dips in my funding around 2022. That has more than recovered since then. I've never had so much money, quite bluntly. And so, like, looking at a lot of the economic factors that we have in the States, and it's not just the stock market, it's also the low unemployment rate. Aside from inflation, things have been going pretty good. And inflation has been coming down. China's problem isn't so much the inflation per se, it's their growth engine and their model isn't working the same way. In part, that is because other nations are not just letting them send all of their stuff in at no cost anymore, because there's this perception, an accurate one, that there's not proper quid pro quo. China doesn't let us sell them things without huge tariff penalties. And so now it's like, well, then we'll take our revenge and we'll charge high tariffs on all your stuff. So it's not that all of a sudden China's charging too much for people to be able to afford the Rolexes and the Speedmasters and all the rest of it. It's just that since their economy has slowed and lots of business people have gone out of business there, when you're nervous, you don't buy stuff. And that's what's going on with them. Swatch, in their sales call and their blame of China, they said that they expect things to go ahead and recover in 2025. So, in fact, jumping back to that article from Reuters, you'll see this notation of China would likely remain challenging for the entire luxury goods industry until the end of 2024, Swatch said, but adding that there are currently excellent opportunities for the group's brands in the lower price segment. Well, I agree with the latter part of that phrase. I do not agree with, and I'm not an expert, so I'm probably just wrong, could be wrong. But hey, it's YouTube. I can be wrong. I think Swatch is incorrect thinking that China is going to remain a challenge until the end of 2024. Based off of what came out of the Third Plenum, which again, there will be more details to come. This is more of a showboaty propaganda thing. It's more of an event than it is a real serious discussion. But usually broad-based policies are laid out there. And again, China's broad-based policies say nothing to me other than some loose statements about deregulating some of their industries for the private sector people in their business. Other than that, it's business as usual. We're going to continue to pour governmental money into tech manufacturing, and manufacturing is what we're going to do, which is what they've tried to do the entire time. And it used to work, and it's not working as well anymore. So why should I think that China's economy is going to recover and Swatch is going to have a great 2025 in China? They didn't change anything. They being China, they didn't change anything. When will these deregulation steps happen? I don't know. They're also still emphasizing how Chinese socialism is going to be their key component, or Marxism with Chinese characteristics. They have a whole phrase about it because they don't follow strict Marxism in the traditional sense, which is, it wouldn't make sense. They've always had some elements of market forces that they want, but they also like really heavily utilize state industry. Okay, that's not, obviously it worked for them and they could buy Rolexes and Speedmasters just fine. But the industries they invest in have been declining, and Xi Jinping's strategy is just keep doing it in the same industries. So I don't see this path recovering in 2025 unless the thought is because inflation goes down in Europe and in America that we are going to want more Chinese products because people will be less nervous about the economy after the election here in the US and after the Fed finally cuts interest rates, and then we'll buy more Chinese goods, and then they will have more money to buy more fancy watches. That's the argument that I think Swatch is stating, with that all of luxury goods will be a problem for China until the end of 2024, which I agree with. But they think it's going to, by that, the way they phrased it, they think it'll be okay or recover or start to recover in 2025. I don't think it recovers in the way they think it is, in a way where, getting back to what Skate Reel brought up in terms of weathering it, I don't think they will be in a position to weather that long. And I don't think sales are just going to go through the roof and we're going to see this massive recovery in watch sales. It is not the pandemic. Crypto may be doing better than it used to, but people have seen so many scams in it. It's not going to be, not all of this easy money stuff that happened during COVID is just not in play now. And so we already know that lots of places in Europe and America are not going to go around. Just people are not going to dump the same amount of money into watches. I had a watch I was looking at used, reached out to a seller, and asked them about a price, and they came down a little bit, but it was still about $4,000 more than I thought I would have to pay for that watch in 18 months. And I told them what the amount is that I'm looking at, because I've actually seen some that were already that price. They just had a lot more physical damage, a lot more scratching and such to the watch design. So I think watches, broadly speaking, are going to continue to come down. And if you look at watch charts and all the rest of it, that's all we've been seeing. The drops aren't the same as they were right after March 2023, when things just really started to collapse. But they've continued to slide. Rolex has continued to slide. So back to that ticker point I had, like what happens? This is great news for those of us who are not in China. It probably would be good news if you still wanted to buy a watch and we're in China as well. But if China doesn't want as many of these watches, they're buying Submariners too, right? They want Daytonas also. It's not just DeVilles. They want Speedmasters. They want Seamasters. They want all of that stuff. And so I think what we are already seeing based off of that, a lot of people have been reporting lately, like a lot of Datejust have been walk-in and able to get now from Rolex dealers. I've heard people saying Submariners, date Submariners, which they make a lot more of, have been just a few weeks wait time in a number of instances. It depends on your market and your particular store and the size that they are. But a lot of stuff that people actually want is showing up more. It's not just two-tone stuff. And we should continue to see that across the segments. And in particular for Rolex, I think we will continue to see a relaxing of the ability to get the watches. Now, people who were stockpiling models for selling later, they might start being a little nervous, because long term, if this is sustained, and China is just not a great market for multiple years to sell luxury watches in. Remember, even Rolex, it's a manufacturer. They don't want to go down to making 500,000 watches a year. That is not the model. So more watches will be shoved into Western markets so that they can try and sell what they've got at the prices they've currently got them at. And as that gets easier and easier, because you've got an entire massive nation of demand that does not have that demand anymore, secondhand prices will continue to slide more. And I expect we will see more sports models used actually fall below MSRP, as it should be. So it's very exciting. I think we will know a lot better at the start of 2025. I think we will see the full effects of it. But I am banking that China is not recovering on their watch sales in a significant fashion in all of 2025. I just don't see it. Not with these strategies that their government's laid out. And their government plays a very heavy hand in their economy. So anyway, I'm not an economist. My background was political science, though. My specialty area outside of the US, which was my main focus, was not China, though. It was actually Malaysia. But hey, we can't all talk about Southeast Asia. They don't have enough people versus the demand that China wields. But I will go ahead and try and get caught up with the chat now, because those were all my main points. So that's what I wanted to talk about. So those of you who are watching live, what do you guys think? Like, what do you think is going to happen with, based off of what we've seen out of Swatch? Soon we should hear from, if it's not already been out yet, I haven't seen it yet, LVMH and Richemont. I think they're going to echo what's happened with, maybe they won't be a 70% decline, because some of them, LVMH in particular, is far more diversified out of watches than Swatches. But Rolex doesn't make their numbers public. But what's happening with Swatch has got to be happening with Rolex. They're not that different. Like, they have a huge Chinese market of demand. So if demand is down, it ain't just down for Speedmasters. It's down for Datejusts too. That's what I'm saying. So Tuna says, the cheaper lines like Tissot and Longines also have a big market in China. Yes. And I know Swatch emphasized in their article here about excellent opportunities for the group's brands in the lower price segment, which I do agree with. I think this statement is accurate. But what we have to remember is, if you had a potential customer who 2 years ago would have been willing to buy a Seamaster 300M, and now is willing to buy, a dive watch from Longines. The delta between those two prices is thousands of dollars. And so Swatch's profit, they might sell the same number of watches in China, hypothetically. I don't think they will, but hypothetically, they could try and position themselves to say, hey, we sell 500,000 watches in China every year. And they still do. And like in 2025, they do. But it used to be 40% of them were Omega and 20% were Longines. And that flips and it's 40% Longines, 20% Omega. That's a huge profit loss because they don't make as much money on the Longines watches. So it's a good strategy for Swatch. And again, about weathering it. And hey, if they can keep the factory busy making Longines and Tissot's, great, because those workers get to keep their job. But from a shareholder perspective, it's not comforting at all. Now, I don't have shares in Swatch, but if I did, I'd be like, this, would I want to sell out now or it's going to be a long-term weathering? I don't think the stock recovers for quite a while. And in fact, I imagine it's been declining for quite a bit ever since we came out of the pandemic, because this demand and people begging to buy stuff and Speedmasters being on wait lists, just unheard of nonsense. It's going away. Good for hobbyists, not great if you're a Swatch shareholder, in my opinion. Koji, welcome to the live stream. I think I actually already welcomed you. Any report on how much the Vacheron sales are down in China? Not yet, but we should hear when their group announces. That being said, they'll probably only talk in group specifics. If they're like Swatch, it's been a while since I've looked into, and I can't remember off the top of my head, I apologize, if Vacheron is a Richemont brand or if they're an LVMH brand. I thought they were Richemont. I'm going to check real quick. But but long story short, normally it's all, they are a Richemont brand. So that's going to be all commingled. So all Lange & Söhne is going to be in that number. Cartier is going to be in that number. Piaget is going to be in that number. Plus they might break out the watch stuff. So maybe like the Van Cleef and the AZ factory maybe they'll kind of talk about their segments, but they don't usually go brand by brand, other than with their shareholders. Sometimes they'll say things like, we had a really great year with Cartier, or Panerai's done really well with our new lower cost offerings, or the price increases with JLC have worked, versus, the demand has fallen across the board for Lange, except for the sports watches. They might say stuff like that, but I'm just, generally speaking, I even reached out to, it was Swatch, not Richemont, but I reached out to Swatch at one point and asked them, hey, I pulled their financial report and I said, I want to know how much you actually made profit-wise by your divisions. Like, I want to know how much Longines made you. I want to know how much Tissot made you. Is there a report I can have? I was very, I guess I was a little just, it's like blunt. Can I have it? And they're like, no, we don't put it together that way for the public. So it's like, you can have the report we published on our website. It's like, the report you published on your website, this was 2023 or 2022's report, looked great, but I wanted to know like how much of it was from the Moon Swatch. They talked a little bit about like how great the Moon Swatch did for them, but I couldn't tell you how much money of the profit share came from Swatch, plastic Swatch, versus how much came from Omega. I couldn't tell. So no, they tend to obfuscate it more when it comes to that level of detail. Giancarlo, welcome to the live stream. I see you're asking Tuna about what he means about Longines, and there was the discussion about how Longines does sell well in China. Giancarlo says, hello, Dennis. Should I get in dive watches Longines or Oris or Certina? Thanks. And follows that with our Longines a great brand or just a ripoff? I have never owned a Longines watch. I have heard very positive things. The one thing I would warn you about is if you're thinking about a watch with several complications, make sure you look into the thickness, because Longines likes to stick a lot of modules in their watches to get their moon phases and date complications and GMT functions and all the rest of it. And long story short, I'd say they're doing modules because their watches are super thick. They get really thick. That's kind of a Swatch Group problem in general, but I'm looking at you, Omega. But I'm not owner Certina either. I have had an Oris, but I don't have an Oris dive watch. I have one of their pilot watches. My order that I would do would probably be Oris, Longines, Certina, based off of pedigree. But part of that is in aesthetic as well. I like the Oris Aquis a lot as a design. Longines, I like a number of their watches, but not as much on their dive side. But I've heard very good things about Longines watches. I've never actually heard anyone tell me that they think they're a ripoff. I don't know if where you're based, like US based or whatnot. Longines are often very easy to get gray market. So in the United States, I would normally point people to Joma Shop if they don't want a used watch and say, why don't you look there first? You can actually find some of their, what is it, the Hydro Conquest or whatever. Some of the Longines watches on Joma are under $1,000 US. They've knocked them down that much. So you can actually, in terms of the ripoff perspective, if you go gray, you're going to shave off a lot of that dealer profit margin out of there and find them much more reasonably priced. So I would suggest that, but I would suggest that for all of those brands. I've not looked into Certina gray, but Oris is often very easily accessible gray market as well. And then, of course, you can always consider used, depending on your comfort level. So usually with steel sports watches in my collecting journey, I've tended to go gray because I usually find a reasonable price for them, gray market. Whereas dress watches, I've always gone used because you get even more savings. So, but that's just me, and it depends on the materials and all the rest of it. I think all three brands are well respected. Oris maybe has got a little bit more of a fanboyness to it because it's an independent brand, whereas Longines and Certina both exist under Swatch. So, Skate Reel is clapping about all the excellent analysis. I am sure the analysis. Yes. Well, we've done our best. Giancarlo says, movement-wise, those L888 movements in Longines, are those good? I'd rather get the Oris. Is the Oris going to have an EBOSH movement, or are you getting like their caliber 400? So that it's not apples to apples. So the L888 is based on the ETA A311.L11, I believe. And by I believe, I mean, I'm not that smart, guys. I loaded up Caliber Corner to look. So the L888 is based on an ETA. So it's essentially a modified, probably slightly modified ETA movement. Now, the good news, normally when I see this with a brand like Longines, and kind of Tissot sort of does this sometimes too, usually what they do is they take an ETA, they knock the speed down a bit by a half hertz or a hertz. And I see this is at 3.5 hertz. And it gives you a longer power reserve out of it in exchange for the slower beat rate. So that's generally what ends up happening. When it's 3.5 hertz, it's usually a sign that it's silicon, which is the case here. So they're doing, at least some of them, and they have various variations in terms of cost certification and not. So anyway, long story short is this is a glorified branded ETA. So third-party movement. Now, the good news is, though, ETAs are really easy to get serviced. So you can find independent watchmakers who could probably work on the watch for you, and you wouldn't have to spend very much money if it needed a servicing. With Oris, they flat out use ETAs and Solitas. I can't remember which. They're basically the same, quite frankly, for a lot of their dive watches, unless they put in their in-house movement. But their in-house movement adds about $1,000 to the price. So, again, depends what we're talking about. If we're talking about a more affordable Oris versus the L888, they're probably basically on par. I would just compare power reserves, or that's honestly probably the biggest factor if you don't tend to wear the watch every day. If you're looking for a one-time, like your single watch, I would go more off of aesthetics and I wouldn't worry about the movement at all. But that's my take. Some others in the chat might have another opinion. Giancarlo says, I'm UK based, but thanks for responding to my queries. And some others in the UK who are watching might be able to suggest to you some gray sources to go look for watches that, and if you're not familiar, gray market it's not like some illicit black market trade thing. All it is retailers, when they can't move watches, they sell them like wholesale to gray market dealers. You lose the brand warranty. A lot of the big gray market people have their own warranty. It's usually less robust, like shorter time periods. But in exchange, they mark them up from wholesale, but well under what you would be able to pay retail, and sell them at that price. So they have a delta where they make a little bit more money than what they paid to the AD who was dumping like 12 of them on this market to get rid of them. Like, I can't move these. I just need to get rid of them because I need the cash to buy newer watches. So as things sit for a while, you start to see that. So for example, within a year of Oris coming out with their bronze cotton candy, colorful dive watches, they were available on Joma Shop, which is a huge gray market dealer, because they couldn't sell them. They couldn't sell enough of them. So dealers were like, I can't just sit with my watch case full of these cotton candy bronze watches. Now there are stainless steel cotton candy Oris watches, and those are going to be more popular, and I want to get those in, so I need to just get rid of these. Who's going to buy a dozen bronze watches at once? A gray market will. So that's what they do. Some brands try and control that more than others. It depends. But it's a good source, is my point. Joe says, I wonder if they will drop or sell off certain brands. I was really intrigued when I realized most of the brands are owned by these large groups. That's an interesting question. There's been a lot of speculation that LVMH and Richemont might just outright merge. That there's been an inclination for that to happen. And a lot of that, I think, is driven by the fact that LVMH, I believe, has desperately wanted Cartier really, really badly. And Richemont will not let Cartier go. And on paper, if you were Richemont, why would you? Cartier is the second to Rolex most profitable, like in terms of dollar amount watches sold per year of any brand. They displaced Omega about 2 or 3 years ago. They're very, very close. Like it's a rounding error difference between Cartier and Omega the last time I looked. However, Cartier moving into number 2 is a pretty big deal. And LVMH, I think maybe more for the jewelry side than anything, but they've been licking their lips for Cartier for a long time, but Richemont won't let them go. So I think there's been some thought that LVMH has enough money, they might just buy Richemont, like try and take control and merge it and just have it be one mega company. Because, I mean, in terms of, I'll have to double check. But like LVMH watch brands they're not as many. So taking a quick, I'll show you guys the Google here. So here's LVMH. I don't think of them as much with watches, but they got Tag. So that's probably their most well-known brand. They've got Hublot as well. And I wanted to think, I don't see them on this list. I thought they also had Zenith, but I don't see them. We'll go to their website. We'll do it live. We can't trust Google. Google's, yes, I'll take your cookies. Google's not being cooperative for us. So you see, they got a whole like leather goods. They deal in wines. They deal in fragrances. So watches and jewelry, LVMH. Very clunky highlight site. Okay, so Bulgari, mostly jewelry, does do watches. Hublot, watches. Tag, watches. Yeah, Zenith. Okay, I don't know why I didn't see it on the Google one, but I was pretty sure because I'm like, I have one. I was like, I think I have one LVMH watch ever. It's the Zenith I own. So you got that, and then Richemont. So Richemont's much more watch heavy. So they got some real big heavy hitters on the price bracket wise in terms of Lange & Söhne and Vacheron are the two kind of prestige brands. Montblanc does a lot of watches, even though they're best known for pens. Cartier, of course, is their best performing brand. IWC and JLC are very storied brands. So they have very high pedigree watch brands. Piaget is mostly jewelry, but they do a lot of watches too. So anyway, so the thought of those two coming together has come up more so than necessarily that Richemont goes and says, things are tough right now. Let's go ahead and drop Panerai. It's like our least profitable one and keep the rest and let it go independent. Now, with brands that are less conglomerate-like, we've seen or heard about things like this. So the Kering Group, which I think were venture capitalists, they let go a few years ago. I can't remember, maybe 3 years ago, of Ulysse Nardin and Gerard Perregaux. So they went independent, and they had been under the control of the same group. So it's not unheard of. There's also been reports of whatever, I can't remember the name, the pharmaceutical company that owns Parmigiani Fleurier wants to sell off Parmigiani. The thing is, I've heard they only want to get rid of Parmigiani, the watchmaker. They don't want to get rid of the Vacher manufacturer that makes the movements for Parmigiani, but also makes the movements for Hermes and I think some other brands. So it gets a little weird, but yes, we could see some stuff like that, Joe. I just don't think we'll necessarily see Swatch say, let's drop Certina, or LVMH say, let's drop Zenith, or any of that. I don't think we'll see that. I think those groups, Swatch, Richemont, and LVMH, if LVMH and Richemont don't merge, they're going to keep their Pokemons that they've gathered of watch brands. I don't think it's to that point yet. Some of the others, like venture capitalists that picked up a brand on the side or stuff like that, where it doesn't really fit with the rest of their empire, they, I think, will either try and sell these off to the big groups or let them go independent, or they go bust. We don't know. Joe says, on a diver, I would suggest Oris or Doxa 200T. Doxa is a good one to consider, especially if you like bright, colorful things, which, given Giancarlo's suggestion of Certina, I would think maybe that is an appeal. Of course, Oris has got some really beautiful watches as well. So, anyway, that's really all I had for us today, was to talk about the Swatch sales and the impact. Hopefully I didn't lose you all too much with the history of Chinese leadership and how they kind of do their economic stuff in the Third Plenum. But anyway, I just wanted to talk about it, and I thought it fit with watches, so I stuck it in here. But that'll be it for this live stream. Again, I do not expect any pre-recorded videos for a week because I'm traveling. If you haven't seen my Breguet review, check that out. If for no other reason than you just want to say, hey, I did it, Dennis, because you asked. Thank you. And I say thank you. You don't say thank you to me for doing me a favor. And then we will be back next Saturday for another live stream, probably cover some new releases at that point, since I didn't this week. But we will just have to wait and see. Everybody, have a great weekend, and I'll talk to you all on the next one.